Welcome back. 50 odd points down on the Nifty. That's how this afternoon has played out, and we are now in the last 13-14 minutes of trade. Let's bring in our next expert on the show. Anand Tandon is with us. Anand, good afternoon. Thanks for joining in. First things first, I want to get your opinion on the life insurers and their profitability vis-a-vis valuations, because this week we've seen some very strong buying on all three: SBI, ICICI Pru and HDFC Life. How do you find these stocks?
It's a space which is fairly attractive. There is no question that, at least in terms of value, the country is still underinsured. I would argue that the number of policies sold is not small, but each policy size is small. Therefore, the market remains very large. Within the lot of them, of course, valuations are all over the place. As usual, HDFC is extremely expensive, but always has been. Every member of that family has always been expensive. To my mind, SBI is the most is placed best because of the kind of support that they get from their parent, especially since the bank doesn't sell anybody else's policy other than SBI Life. ICICI is in between the two in terms of valuations. So generally, the space is good. I think it should form a part of the portfolio, especially on the financial sector, much better than the asset management companies, much more stable revenue stream, and perhaps at this kind of stage, perhaps even better than the banks and certainly the NBFCs.
Okay, fair enough. Anand, hi, good afternoon. Thoughts on IndusInd Bank once again, testing 1400?
Well, yes, Anuj, I think at this stage, you don't want to deal with anything which has any amount of uncertainty, especially in terms of quality of loans. So if there is even a slightest hesitation, I think people are moving out of it. If you are looking at private sector banks, especially those which have done reasonably well, and especially on the consumer side, one can always argue that, you're better off staying up with the HDFCs and Kotaks of the world. They're still delivering fairly significant growth. The only plus point going for IndusInd was the integration, which will of course increase the kind of margin that BHIN was generating. But I think that's now being overshadowed by the overall concern in terms of the issues with regard to quality of assets, etc.
Okay. Anand, stay on. We have some more questions for you. For now, let's also bring in one more voice. This is a conversation that we had with Saurabh Mukherjee of Marcellus Investment Managers earlier. Now, Saurabh says that we're only halfway through the cleanup in the market vis-a-vis some of the debt and leverage issues. He says that stress is going to continue in the financial sector. Take a look.
2 years ago, I started sounding the alarm bell. Obviously, you don't get any prizes in India for sounding alarm bells. And for the last 2 or 3 months, I've been saying that we're halfway through the cleanup. So I think the window of opportunities for well-capitalized private sector banks is getting bigger and bigger. I'm sure some of them will raise fresh capital. Those who already have well-capitalized balance sheets will profit immensely over the next 12 months. But for the system as a whole, I think there's more work required from RBI and from New Delhi. And in specific, I do think the RBI will have to come up with some sort of measure which improves the bond market, the money market's confidence in NBFCs. Without the money market, the CP and the CD market regaining confidence in NBFCs and HFCs, I think it will be very difficult to restore vitality, restore vigor in the economy. So I think there is a lot of focus on the budget and on the RBI to see what can be done for a degree of confidence to return in our NBFCs and HFCs. So halfway through, still a lot of work to be done.
From the budget, what would the key expectations be? I mean, there are talks of, of course, creating of an SPV bond, etc., for spurring infrastructure, interest subventions on bank loans to MSMEs. The wish list is pretty long. But if you had to just narrow it down to 2 or 3 things that would impact the market positively, what would they be?
I think there will be government steps. I'm not so sure the government itself can move the needle here. I think what we need is a combination of RBI and Delhi to come together and say, for example, steps like reducing risk weights, regulatory risk weights on SME lending. It'll be one of the easier ways to get confidence going, to get bank lending going back again into SMEs. The PSU banks will obviously get a modest recap. Fiscal circumstances are difficult, so I don't think the recap will be very big. But if you can combine that recap with the reduced regulatory risk weights on MSME lending, that should act as a source of vitality. There's a lot of work to be done. I think SEBI has taken the first step in saying the mutual funds aren't going to be the financiers of promoters and SMEs in our country. It's not their natural role. Over to the banks, over to the RBI.
You are saying something needs to be done to invigorate the NBFC space to get the confidence back. Now that it can't be mutual funds, what else is required? I mean, everybody's been crying for this line of liquidity, but the problem is that it was a self-created issue, right? It's not an external shock that led to it, which is why taxpayer money should be thrown in. But anyway, your solution.
A voluntary AQR where NBFCs who submit to going through an AQR process get a reduction in their regulatory risk weights. So you get a carrot and a stick. The stick obviously is your balance sheet is cleaned up through AQR, and I think there's a lot of NBFCs and HFCs out there who need that cleanup. They simply don't have credible balance sheets at the moment. But if you submit to that AQR, if you come out clean, the RBI will give you a way to get lower regulatory risk weights, which means you can lever up your balance sheet further and generate healthy ROEs.
This PSU bank rally, do you think it's a bit suspect? Because, you know, apart from recap, the other big hope is that the worst of the NPA cycle is out of the way, and this year they are going to report perhaps healthy profit.
Is the worst of the NPA cycle out of the way? And I've sort of long contended that that's not the case. I think we've had a prolonged economic slowdown. You can't have an economy slowing down over the last 2-3 quarters and the NPA cycle bottoming out. It just logically makes no sense. I mean, it just makes no sense at all. You've got your real estate sector slowing down, your auto sector slowing down. On what logical basis does anybody say NPAs have bottomed out? I don't understand. So that's one piece. The second piece is, should you be buying PSU bank shares? You know, as we've seen, you know, over our entirety of our lifetimes, the PSU banks obviously have to listen to their main shareholder, the Government of India. The Government of India rightfully has social objectives rather than profit-making objectives at the forefront. Given that's the case, I think it's irrational to buy these shares and hope for them to make money for you. They are beholden to their largest shareholder who has social rather than profit-making objectives, and I think rightfully so in the case of the Government of India. It's easier to buy well-run private sector banks. We have at least a couple of them in our country. Buy those shares. There's a well-capitalized banks facing enormous opportunities over the next 2-3 years. You know, hit the full toss for a 6. You know, don't try to hit the well-pitched ball on the off stump for a 6. You know, make the easy decisions, and I think making money in India becomes much easier.